The market hit a bottom early in March, and many investors are hoping April brings some relief. There are headwinds and clouds on the horizon, but the underlying fundamentals remain solid. In this video, I'm sharing my top 5 stock picks for April 2025 that could potentially explode in value. These aren't just random picks. Each company has a strong outlook and is positioned for growth despite market turbulence. They're growing at double-digit pace and should continue doing so for years to come. So let's dive in. What's up everyone? Welcome back to another video. If you're new here, I'm Daryl Trin, and on this channel, we're talking about investing, personal finance, and building wealth in ways that actually work. Before we jump in, remember that I'm not a financial advisor and this is not financial advice. Always do your own research before investing. And if you find value in this video, smash that like button and subscribe for more content like this. Now let's talk about what's happening in the markets. Spring is in the air, and I think investors would love to see a spring in the stock market as well. March felt like the market was desperately trying to find a bottom, and while we did hit one early in the month with a decent bounce, we're seeing pressure again. We're still above those lows, but I wouldn't be surprised to see those lows retested or even surpassed in April. That's actually good news for long-term investors looking to build their positions. There are 3 major catalysts to watch this month: policy changes and potential economic impacts, earnings season starting mid-April with major banks reporting first, the FOMC meeting, and potential interest rate discussions. The latest PCE data showed core inflation accelerating, so don't hold your breath for rate cuts at the upcoming meetings. But despite these economic headwinds, there are still incredible opportunities in the stock market. So first up is Google. Alphabet, or Google, has outperformed expectations and provided excellent guidance for the upcoming quarters. They're growing their core advertising business while making significant inroads with AI integration across their product lineup. What sets Google apart right now is how they're monetizing their AI capabilities while competitors are still figuring out their own strategies. Their cloud division grew 28% year over year last quarter, which is impressive considering the competitive landscape. Analysts have been raising their targets, making it one of the most upgraded stocks in March. The current AI boom is a huge tailwind for Google, and they're positioned perfectly within the data, infrastructure, and talent to capitalize on it. At current price levels, Google is trading at a reasonable 22 times forward earnings, which is attractive given their growth potential. They're generating massive cash flow and have a $70 billion buyback program that should provide support for the stock price. Next up is Nike. The company received notable analyst attention in March as they started showing early signs of success with their new direct-to-consumer strategy. They're focusing less on wholesale and more on building direct relationships with customers through their apps and stores. Nike's digital transformation is paying off with improved in-store visits and less reliance on promotions to attract their customers. They're leveraging data to create personalized shopping experience and better product recommendations. What's most exciting is their expansion in emerging markets, particularly in Asia, where they're seeing double-digit growth. Their innovative product lineup for the upcoming Summer Olympics should drive significant consumer interest. Analysts are predicting a 15 to 20% upside from current levels, but that might be conservative given the momentum that they're building. I expect Nike to continue revising their guidance upward as these initiatives gain traction throughout the year. PayPal has been under pressure for the last couple of years, but it's now trading at an attractive valuation given its cash flow and growth prospects. The fintech giant has been streamlining operations, cutting costs, and focusing on its core payment processing business. What many investors miss about PayPal is how they've been quietly expanding their cryptocurrency services and building partnerships with major retailers. Transaction volume is growing steadily, and merchant services revenue increased by 15% in the last quarter. The company's strong balance sheet allows them to weather any economic uncertainty while investing in new technologies. At just 15 times forward earnings, PayPal is significantly undervalued compared to other payment processors. Analyst sentiment has been improving, with several major firms upgrading the stock in March. The consensus price target suggests a 25 to 30% upside from current levels. As digital payments continue to gain market share from traditional methods, PayPal stands to benefit substantially. Next is Amazon. Amazon has struggled because of post-pandemic adjustments and took on some costs to expand its infrastructure. Since then, the company's business has rebounded strongly, setting records in both e-commerce and AWS divisions. Most importantly, Amazon's free cash flow is phenomenal, increasing by 74% year over year. They've been effectively controlling costs while maintaining growth, which is exactly what you want to see from a mature tech company. AWS remains the market leader in cloud computing despite fierce competition, and their advertising business is quickly becoming a major revenue driver. The company is also making significant strides in healthcare and AI, which could be massive growth opportunities in the coming years. Analysts have been raising price targets, with several seeing 20 to 30% upside from current levels. At 25 times forward earnings, Amazon isn't cheap, but it's a diversified revenue streams and market leadership justify that premium. Last but certainly not least is AMD. AMD is positioning itself as a major player in the AI chip market, directly challenging NVIDIA's dominance with their new MI300 accelerators. AMD's data center revenue grew by an impressive 65% year over year in the most recent quarter, showing their products are gaining traction with major cloud providers. Their latest CPU roadmap also looks extremely promising, with performance gains that should help them continue taking market share from Intel. At current levels, AMD is trading at a reasonable 35 times forward earnings, which might seem high unless you compare it to NVIDIA's 55 times multiple. If AMD can capture even a small portion of NVIDIA's AI chip market share, there's tremendous upside potential. The company is forecasted to grow earnings at a 30% CAGR over the next 3 years. Analysts have been revising their estimates upward, with price targets suggesting 25 to 40% upside from current levels. So there you have it, my top 5 stock picks for April 2025. Remember, these are companies with strong fundamentals, positive analyst sentiment, and compelling growth prospects even in an uncertain market. Finding these kinds of opportunities is so much easier with the right tools. If you want to discover stocks like these on your own, I highly recommend checking out market-io. This amazing software helps you scan for stocks with similar growth patterns and fundamentals. And the best part? You can try market-io completely for free for 7 days by clicking the link in the description. It's the same tool I use to find these opportunities before they explode in value. So which of these stocks are you most interested in? Do you have any picks of your own for April? Let me know in the comments below. Thanks for watching. Don't forget to hit that like button and subscribe for more investment content. As always, happy investing.